Is dividends and income right about air products? Let's talk about that. Hey guys, I'm the Newb investor. Today we'll be screening air products, or ticker symbol APD, through our three metrics to see whether the stock is trading at overvalued, fair, or discount prices. From there, we should determine if the stock is a buy or not at current prices. As I was doing YouTube, I came across this channel called Dividends and Income. They sure do a lot of these things, recommending the best dividend stocks and all. Probably some of them are recurring, and probably at some point, all stocks with dividends has been tackled already. But anyways, the point is you buying at the right prices for the stock, not buying dividend traps or overvalued stocks. Always remember, no dividend is safe and secured. Also, you have to know how they're paying you those dividends and what's left for them to continue their business. It was a video called Top 5 Stocks for March 2022, posted in March 5, and APD was their number one pick. Prior to seeing this video, I've heard and seen a lot of people liking the stock. And so I decided to do our three metric analysis on this. I have to say that every investor has different approach on investing in the stocks. Mine and theirs are probably different. I'm not questioning their process, but I guess in this video, we'll confirm if APD is a top stock and one of the best dividend stocks to buy in March 2022 through our three metrics. APD is currently trading at $221.50 with highest price of $316.39. That's 30% of the highest. Current market cap of $49.22 billion with PE ratio of 22.66. EPS trailing 12 months of 9.52. APD gives out an annual dividend of $6.48 per share, a yield of 2.92% of the current price. If you're in it for the dividends, its payout ratio is at 68%. We want it lower than 60%. At 68, I'd say it's kind of risky, but it's debatable. First metric, we want an EPS multiple of less than 3. It's 2.38. We get this multiple by dividing the current PE by the EPS trailing 12 months. We do this because we want to know how much we're paying for the stock based on their current earnings. It means we're buying APD at 2.38 times their earnings. If we buy at these prices, I've included here the EPS history and their shares outstanding. I must say, for the very small number of shares they have, their EPS is still a bit low. Just by looking at this, I can already tell that their net income is low. Next metric, we want to pay $1 or less for 1% of the money they're making. We determine this by taking the lowest yield of the current year's yields and the averages of 5 and 10 years yields. The more data, the better, but in this video, we'll only be using 5 years of data just to show you our process. What you see here is the revenues they constructed, the costs, expenses they use to make the revenues, and income they keep off of those revenues. The above data is in billions, below is in percentages of their respective revenues. I show you the relationship of the sales. In 2021, they used 7.186 billion in COGS to make a revenue of 10.323. That's 69.61% of the total revenues. In average, they use 75 to 80% of revenues in costs and expenses while keeping 10 to 15% in income. I've also included here the revenue growth as this second metric does not account for the values of their revenues. They'd still make the same yields with declining revenues. That's why it is important for companies to maintain or retain their current revenues. Of the four highlighted values, we'll take the lowest value to divide their current PE. Why the lowest? We want the lowest so we can have a baseline for our assumptions. In this case, it's 8.51 and our discount is 2.66. It's not actually a discount but a premium. This means we'd be paying 2.66 times their yields if we buy APD at these prices. That's saying we're paying $2 for a dollar. Third and last metric, we want to know our discount to when the markets have valued the stock before compared to how it is valued now. I have here two historical data, one from Guru Focus where this data is readily available, and the other is from Macro Trends where I manually took the PE from a range of consolidation where the stock is traded then. You'd see here the highs and the lows of PE and the numbers of quarters I took the PEs from. Of the two highlighted values, we'll use the lowest average historical PE to divide our current PE of 22.66. And we'd get a discount of 0.94. This means the stock is trading at a lower PE now compared before. In conclusion, the stock beats two of my three metrics. The stock is trading at overvalued prices as it trades at 2.66 times their free cash flow yield in 2021, which is the lowest yield. I don't own the stock, and I just screened this with my humble and honest opinion. Should you pay premium for the stock like it's trading now at 2.66 times? No. Based from the revenue growth of single digits, I would not pay premium for the stock. Would I buy it? No. It's expensive, obviously. I think the fair value of the stock is around $80. Brutal, I know. This is what you get when you multiply the EPS of 9.52 by the yield in my second metric of 8.51. That's 60% of the current price. My entry price would be at $70, a price just below the fair value with, a little bit of margin of safety. Why are my entry price and fair value so low? It's because of their very low EPS for very little number of shares. If they can increase their revenues, they have to be buying back more shares. What this three metric tells us is maybe, just maybe, APD is not one of the best dividend stocks to buy in March 2022. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price we pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.